And what do we need to look at when we're starting a business? Or maybe we already have a business and we want to create an entity for it. So the first thing you need to ask yourself is, what are going to be my startup expenses to get this business off the ground? How much of it is going to take as far as investing? Am I going to have to go out there and get education? I mean, maybe I'm taking some training courses on how to invest in real estate or how to invest in the stock market or how to do X, Y, or Z, whatever that is. That's going to be an expense. What type of equipment do I have to buy to get my business going? Let's assume that, you're starting this business and you estimate that out of the gate, it's going to take you $40,000 to really get to where you need to be to run this business effectively. When you add in the education, maybe the travel to the event to learn about how to run this business. So all of that gets factored in. Every dollar you spend towards this business is what I refer to as a startup expense. So when you're looking at your business, if your startup expenses are going to be greater than, let's say, $10,000 to $15,000, then the type of entity you should consider setting up here is an Inc. over and not an LLC. So if you're above $10,000 to $15,000, you want to create a traditional corporation. I would encourage you to do that over a limited liability company. Now, S versus C, it really doesn't matter here. We'd want to analyze it. Maybe an S corporation makes sense for you. So if we created a traditional corp, we could elect to treat that as an S corporation for federal tax purposes. And the benefits I just showed you with running the salary out of there, they're going to be yours to have. Maybe you want a C corporation, and I'll explain why in just a moment. But the point is in this scenario, when you have higher startup expenses in $10,000 to $15,000, the C corporation or traditional corporation over an LLC is something you ought to consider. Now, you're probably wondering, why is that? Why not just set up the LLC? Well, it has to do with what happens if your business fails. Everyone thinks that they got the greatest idea and that there's no chance that the business is going to fail. It's going to take off and we're going to do just fine. But there's always that possibility that it doesn't work out. Now, I've dealt with people before that have followed the advice of individuals like this guy on the internet that's an attorney that talks about this stuff, that set up an LLC and chose to treat it as an S corporation, and their business failed. And now they had all these money that they'd invested into running their business. Let's say they had $80,000 invested in that business, and then they have to shut it down. Well, what happens to that $80,000? Well, individuals that your CPA will tell you, well, you get to write that off. Great, I get to write it off. But what they don't tell you is that when it's an LLC that you have and that business fails and you have a loss inside of the business, you get to write off $3,000 a year on your 1040. So examples as follows. Let's assume that we have two individuals here, and wife started the business, didn't work out, and the husband's over here and he's pulling in $110,000 a year, W-2, working for his employer. Well, we have an $80,000 loss from that business when we shut it down. How much of that loss can be applied to that $110,000 to reduce their overall taxable income? Because they just lost $80K. Well, in the scenario where you set up an LLC for running your business, you'll be able to write off $3,000. That's it. And what about the other $77,000? Well, I hope you got a lot of runway left in your life, because you'll write off $3,000 ongoing until you use it all up. So you can probably look at this and go, man, that's going to be 24, 22 years. That's going to take me a long time to get to that point where I collect it all. Exactly. And therein lies my point. When you're talking about creating a business entity, one of the things, it's not just S-corp versus LLC, it's also the type of the business entity. So what I would recommend you do in this scenario, if you have higher startup expenses and it's going to take some investment to run that business and you're concerned about the possibility that maybe it's going to go down, you want to start with a traditional corporation. Now, the reason you're going to do this is that a traditional corporation will have 1244 stock loss treatment. All right, so whenever you talk to a CPA about this and they say, set up an S-corp or an LLC, treat as an S-corp, say, does that have 1244 stock loss treatment? And they'll say, no, it doesn't. Oh, well, I don't know if I want that. And the reason why you're going to say that is because, using my same example again, which actually happened to one of our clients, we set up an Inc. for them, a traditional corp, And the 1244 stock loss was adopted when we created the entity. So this is something you have to do at the outset. We adopted to treat it as 1244 stock, the interest that they took in their corporation. When they decided to shut that business down, that $80,000 that they had in there of money that they'd invested and they'd never been paid back, that they'd lost in that business venture, we were able to flow that down to their 1040. So when I showed you that husband and wife, where the husband made $110,000, we took that $80,000 off the $110,000, so they only had $30,000 in taxable income for the year. That opportunity is only available to individuals who create a traditional corporation. So I hope you understand now when I'm bringing this up is that there are complexities that go into it, since you have to consider the type of entity and how it's taxed. Now, whether it's a C or an S, that's not relevant to 1244. Both C and S are eligible to take this type of deduction. However, it's the type of entity that you set up that's very important. So the first thing I'm going to look at is your startup expenses. And so when you're setting up an entity, what you're focusing on then here, if you're concerned about startup, it's Inc. Okay, versus LLC. Higher startup expense means that you're going to want to set up a Inc. over a limited liability company.